Back. All right. Hey, so want to welcome Melissa Lape. We've talked about doing this live stream Q&A for a long time.
Yeah.
And the more we plan, the less it happened. So we decided we were just going to throw this on and we're going to wing it today.
Yeah.
And we're both professionals. We both know that we can knock it out of the park. So here we are, live Q&A. Give us some feedback on what you think would be a good name for our little Q&A segment. I went with Selling Sunshine. If you guys have some really fun, cool ideas, be sure to share those with us. Let us know. And we'll take all of those under advisement.
Yeah. He suggested, what was it? Seize the day, buy the home. What was the other one?
I don't even remember. There were so many.
I don't know, but we're both in Florida. We serve the whole, United States, but we want something super snazzy and cool.
Yeah.
So give us your suggestions.
Definitely. All right. Well, Melissa, let's talk about a topic that a lot of people have been asking me. I'm sure they've been asking you the last couple of weeks. We know that next week the Federal Reserve is meeting, and there is indicators from what they've said that we're going to see them cut the Fed funds rate. Some people are saying it's going to be a quarter. Some people are saying it's going to be 0.5%. But either way, whatever they decide that they're going to do, that doesn't necessarily translate to mortgage rates specifically. There's definitely influence when the Fed cuts the rate. It could make mortgage rates improve as well. It could make mortgage rates, go a little higher. The reality, though, as you know, is that we have already known that the Fed's going to be looking at cutting the Fed fund rate. So most of our investors, most lenders have already included those improvements into the pricing, which just means that we've already had some of the better rates, if you will, that they suggest might be coming, that we've had available now for the last couple of weeks.
We've already been seeing it for sure. I mean, on our refinance transactions, on our purchase transactions, government transactions for sure. I mean, prices and rates, they're going down and we're seeing significant improvement. Those refinance transactions are starting to come back out of the woodworks because they're seeing the potential savings right now.
Exactly. So if you're out there thinking that you're going to wait until next week to kind of start the process because rates are going to be better, the good news for you is that you can actually get started sooner and you'll still see those great rates that you expected to get next week, but you're just going to get them sooner. So in this instant gratification, time that we live in, you're getting it today, right now.
Right. So why are you waiting?
Exactly. So let's unpack that a little bit more. Let's say that we do, hypothetically, this is absolutely not a forecast. This is not a suggestion, but hypothetically in the next 3 months or even 6 months, if we do see these rate improvements that everybody wants to see, what do you think? And I know the answer, but for the sake of those watching, what do you think is going to happen in the market when these better rates are suddenly available?
Is this for me or is this for live people?
It's for you, Melissa. I'm asking you, what do you think's going to happen?
I think the prices are going to go up. For sure. We saw it during COVID. Rates went down, prices went up, inventory. We were in bidding wars. People, started bidding over asking price. I was a consumer during that time, house shopping. And at one particular property, I offered 40 grand over asking and we were still out overbid. So, it's like a catch-22. People are scared right now because they don't really know what's going on with the market. We're already seeing the improvements, but then when the rates do trend down, the inventory, everybody wants to sell and they're starting to jack the prices up.
Yeah. So you had already bid 40 over asking and you still got outbid?
We did. Yep. And we were one of the consumers that wrote a beautiful letter to the seller about our family and how much we love the home, and we did not get it. And that was the third property that happened. Not so much over the asking price. I believe that one was our highest offer out of the 3 that we loved. But yes, that was me. I was one of those.
Well. Yeah, I definitely heard that story quite a few times. I'm sure you heard that story quite a few times, that everybody that was trying their best to get over ask, bidding well over ask, was getting outbid, because there was always somebody out there that was willing to pay even more. So that's, and we're not telling you this to scare anybody into, making a decision sooner than later. We're just sharing with you the reality, what history has shown us happens when you have a lot of people on the sidelines waiting to get back into the market, waiting to get back in and start home buying again. You have a feeding frenzy, so to speak. You've got everybody that's coming back into the game. You're going to have sellers now that somehow hold all the cards, and they're going to be able to ask for higher prices. They're going to be able to have their
concessions. They're not going to give concessions. Why would they when they don't have to? They have multiple offers on the table, and they're going to be a lot less likely to give those seller credits doing repairs, because some other consumers don't care about the repairs. They want the house so bad, they're willing to do it themselves. So for sure.
Exactly. There were a couple of loans that I did during that period of time where my buyers wanted these houses so bad. They were bidding well above what they really should have been bidding, and they still didn't win those houses. And some of them were just heartbroken. They ended up having to settle for a different house in a different neighborhood potentially, and it's not fun. When you go again and again, you wear down, you get fatigued, right? You don't want to keep putting in offers. Despite how positive you might be, you start to get that little bit of negativity, and it wears on you. So I would much rather be looking
defeated. I was starting to feel defeated in my home search, and the holidays were coming just as we are currently entering the fourth quarter. And I'm like, okay, I'm a mom and I have kids, and I'm trying to prepare for a move and still decorate my house and put presents under the tree, all in this really crazy time. And my house literally went under contract on the very first day on the market when we listed it. So we ended up asking the seller for a 60-day closing just because we hadn't found anything, and it was tough.
Yeah, it's a different environment than we're in today. And we know that at some point that's likely what's going to happen. You're either going to have rates that improve to a point where everybody jumps back in, or everybody's going to come to the realization that it's not going to be in the 2s and the 3s that we had during COVID, because those rates were not natural rates. Those rates were as a result of quantitative easing, where the Fed was buying mortgage-backed securities in the tens of billions of dollars every single day, which was artificially showing much higher sales or higher trading on the mortgage-backed securities, which helped float rates down as far as they went. That is not what we are expecting to have anytime, probably during my lifetime, that we're going to see rates in the 2s and 3s again, because it would literally probably take a worldwide pandemic for that sort of thing to happen.
Mm-hmm. And I tell clients all the time, that was a historic low. I remember when we purchased our first home in 2006, we had 6.5%. That is the norm. But so many consumers remember it being in the 2s or in the low 3s for so long that now when they hear 5.5 or 6, they're like, oh my gosh, the rate's so high. Well, really, it's not. Historically, 2s and 3s is out of the norm, not really where we're at right now with the current market.
It's true. It's true. Yeah. So as people are joining, if you have questions, if you want us to give you some advice, education, whatever the case might be sure to let us know. You can leave comments, and we will see those comments and we can answer those live. So what do you see, Melissa, in your market? I know I'm on the East Coast area called the Space Coast, and you are a little bit farther north, maybe a little bit further inland from where we are. What are you seeing in your market with real estate prices? We're seeing huge jumps still here. We're not really seeing the flattening or the softening that most of the country is seeing. I think Florida as a whole still has a very vibrant real estate market.
I would agree with that 100%. I would agree. I mean, I'm not seeing month to month huge increases, but for example, there's a house on my street. It sold 2 years ago for $460. It's listed for $730. So I mean, in 2 years, yeah, it sold for 460 and it's on the market for 730. So we're definitely seeing that increase here as well.
Yeah, like most things, Florida does not follow the rest of the country. We're still very much very busy real estate market. And most of the buyers that I'm working with now are coming from out of state. They're moving into Florida from other places. And few are moving from South Florida farther north into, Central Florida and Northern Florida. So there's a lot of movement, not just outside of Florida into Florida, but within Florida. There's constantly new contracts that I'm seeing that are people that are buying here, that are moving here because of work, retirement, whatever you want to call it. But
Yeah.
we're still growing. We're still a very vibrant, very active real estate scene here throughout the whole state.
Well, I agree with that. So I'm near the Villages, which is the retirement capital, and really the season here for purchases is October, end of September, October. And people coming from up north, they stay and they're searching for their home usually until around Easter time. So here in my area, we're starting to ramp up because some of those seasonal or possibly seasonal people looking to be permanent Florida residents, they're starting to come. When the weather's cooling down, now is their buying time. And I've spoken to a lot of my local agents that said, yes, they're coming. We already have, people reaching out to us saying, hey, we're going to be here the whole week of X. We want to see properties during this time. So for sure. And I just saw a headline the other day in my local newspaper that said, a home in my local area that sold 2 years ago for $515 in the retirement area just sold for $1.2 million. Yeah.
Really?
Yes. 100%.
Okay. These are, yeah. That's surprising. Like that's exciting, but it's surprising.
It is.
Okay. Wow.
So while those interest rates are going down before all of the market starts getting flooded with buyers coming from up north looking for their seasonal or permanent retirement home, now's the time.
Yeah, exactly. So tell me more about living near the Villages. I mean, there's a ton of fun facts and things that you've probably heard as well, but that's an area that when I drive through it always has a lot of activity going on. Are there a lot of things in the community that you can be a part of?
Yeah, so right now, currently, there's 3 downtown squares. They have live entertainment every night until 9 p.m. They're constantly doing farmers markets. They have classic car shows where residents from the communities bring their super cool old Mustangs, Corvettes, and you can look at that. There's dancing all the time. Halloween is coming up. They have a Halloween event where you can dress up, go to the square. They have Halloween costume contest, and every single square has a little drink hut. So you don't have to be a village resident. You can go to the drink hut, get your toddy, and go down there and just enjoy the entertainment. And I like to people watch because it's just fun.
Yeah.
These are seniors who feel like 18 again, and they're out there dancing and cutting a rug and just having a good time. So it's super fun.
That sounds super fun. Yeah, I'm sure some of those people probably could make me look like I'm old because I don't know that I move as well as some of them might.
I was going to say, they make me feel old.
Yeah.
I can't do some of the moves that they're out there doing.
Yeah. Jeez, that's wild. Like it's funny that you bring that up because I see myself as I'm getting older becoming more and more like, my parents and how my grandparents were thinking, man, they're in their 40s. They're super old. But the reality is there's still a lot of life left to live. So I wish that I had a different thought when I was younger about people that are, in my age bracket, because this isn't old and there's a lot of life left to live. So God bless those people that you described that are out there cutting a rug and, busting a move. And I want to do that when I'm their age. I want to get there and be that flexible.
Everybody always says moving to the villages, they feel like it's like the senior citizens Disneyland. There's so much to do. And I remember saying to my mom when I was younger, Mom, how old are you? And she'd say 38. And I'd go, gosh, you are so old. But now I'm like, it's not really old.
No,
I mean, she's 69 now and that's not old.
No, it's not. Exactly.
And she would be one of the ones out there cutting a rug.
Out there doing it. Does she live around here?
Yeah, she just retired and moved 2 weeks ago to our area.
Nice.
Yeah.
Nice. That's awesome.
She's Orange Theory 6 days a week. She's in better shape than me.
Good. Yeah, well, that's something for you to aim for, right?
Right.
Yeah.
Like my mom when I grew up.
Yes. So Melissa and I are here answering your real estate and mortgage questions live. If you have any questions at all, go ahead and leave us a comment. We can see those here and we'll be able to answer those for you.
Yeah, we're happy to help. There's a lot of people who have questions. They don't know, what they should be doing in this market. Is it the right time to buy? Also, what kind of programs can we help for people looking for down payment assistance? So we're always happy to answer some of those questions that you guys have.
Absolutely. There's been a lot of questions that I've gotten recently about different down payment assistance options. And we have the famous Hometown Heroes here in Florida that comes out in July, and it quickly gets run out. But the good news is that that's not the only option. That's not the only program.
Yeah, Florida Bond.
Giving us some props. Thank you so much. Yes, I agree. I think that Melissa is awesome. Both of you, both Melissas are awesome.
We're the M to M.
The M to the M. Yes.
That's our 2-4 Blitz team name. Yeah.
I like it.
Yeah, but we have Florida Bond, which is another great e-housing product. FICO requirements. A lot of the requirements are the same as Hometown Heroes. Give you a flat $10,000 in down payment assistance and closing costs. So that one's a great one, and they don't run out of funds.
No,
they do not.
No, there's a lot of different options. I saw one of our investors released a new DPA down payment assistance program just a couple days ago. I got an email that they're offering Chenoa, which is something that I didn't know that we had access to, but now we do, which is exciting.
And we do have our awesome 100% FHA financing too, which is a forgivable grant, 100% forgiven the day you sign. The day you close, you never pay that money back. So that's super cool.
That's awesome, because that's a great point, actually, because a lot of down payment options, until you actually start to look into them, you don't realize that some of them are second mortgages that may have payments that are going to be due monthly. And if they're not payments that are due monthly, at some point when you either refinance the property or sell the property, you have to pay back all or a portion of that amount that you borrowed. So the fact that we have access to that 100% fully forgivable the day that you fund, basically, down payment assistance is great. That's not something that everybody has access to, and it's something that we have access to at Coast to Coast Mortgage and at Short Point Mortgage.
Absolutely. And they still allow the 6% back seller concessions on that too. So, not to say that they're going to get the full 6%, but that helps in addition to the grant money.
Exactly. Even if you only got 3% on that FHA loan, you've got the grant money that's going to cover your 3.5% down payment. And then you got 3% from the seller to help cover some of your closing costs. You might have very little actual out-of-pocket expense, and you're able to go ahead and purchase that home. So if you think that you are interested in looking at that, reach out to us and let us know how you're set up, and we can let you know what your options are.
Absolutely. And we love veterans too.
Yeah, we do.
We love our veterans. So we definitely do VA loans. We do interest rate reduction loans, which is no appraisal, no income, no assets, super easy. I just had a borrower close and he saved $422 on his monthly mortgage payment.
How much?
$422 a month on his mortgage payment.
And that was a VA IRRRL?
That was a VA IRRRL.
So you see that, the interest rate reduction refinance loan, no asset requirements that we look for. No credit, well, we have to check to make sure you have credit, but it's not a hard credit hit probably. And then no appraisal.
No appraisal, and it's just a mortgage credit check. So there is no other trade lines we're looking. We're just making sure that the current mortgage you've been making the payments on time.
Exactly. So if you have a VA loan and you closed on that VA loan probably anytime in the last 12 plus months, reach out and let us see what we can do to help you get a rate reduction on that. It's called a streamline refinance with the VA loan. It's referred to as the IRRL, the IRRRL. And again, you can get that program to save every single month. And it's not only a quicker close because it's limited documentation and so forth, but it's also something that you should look into because it's going to be lower cost.
IRRL. I feel like that should be like a dance move. IRRL.
Yeah.
Especially the way they spell it, like let's do the IRRL.
I'm doing the IRRL. Like I'm taking classes to learn the IRRL.
We're gonna do the IRRL. And what about USDA?
There you go.
Another great option. And those rates are super, super low. Just locked in a 4.875 on a purchase on a USDA loan.
USDA. Yeah. USDA is great. The thing with USDA is you've got to find the right area because not every area, not every home, not every neighborhood is going to have USDA eligibility. But if you find that you're interested in looking into that, we can help you try to identify some of those areas. If you're not already working with a real estate agent that knows a little bit about where those areas are, then we can help you with that too. So reach out to Melissa or I, and we can put you with a real estate agent that knows a little bit more about that if you need that help. Or if you just want to learn more about the USDA loan program, that's 100% financing as well. Let us know.
Absolutely. It's a great program for sure for the 100%. They do have a USDA eligibility tool on their website. So if you're ever at home in the evening, just looking online, browsing houses, and there's something that you just absolutely love, let us know. We can send you the eligibility tool so you can check it out.
Yes, that's correct. Well, does anybody have any questions for us? We have two qualified, bona fide mortgage experts here ready to answer your questions about real estate and mortgage so that you can get ready to become a homeowner. If you're somebody that never thought it was possible, we want to show you a clear pathway to be able to do that because you can become a homeowner.
And we help investors too.
Yes. So tell us about some of the investor options that we have available.
Well, we have the DSCR, awesome for investors, 20% down standard, but we do not qualify you based on your income, your personal tax returns, your W-2s, or your pay stubs. We are qualifying you solely based on the rental income stream for the property. So again, if you want to run some numbers and see if there's a property that you're interested in that could make an awesome revenue stream for you, reach out to us and we'll be happy to check that DSCR score.
Yeah, so with the DSCR, that's a fantastic option for somebody that's looking at a rental property. So it's going to be a property that you're not going to occupy ever, but it's going to be a property that you will have an income stream from. And like Melissa said, we're not going to be looking at your income, your assets, your assets we need to make sure you have. I got to be careful saying that. We're not going to be looking at your income streams. We're going to be looking at the cash flow on that rental property. So if you find a rental and the mortgage payment is met by that rental, then that essentially is what we're going to be looking for. There's a ratio, a debt service coverage ratio that we have to try to meet. And depending on what that ratio is, that's going to dictate what your rate's going to look like. It's going to dictate what your approval looks like. So if that's something you're interested in and you have the 20% down, and you want to either get more investment properties or you want to look into the option of becoming a landlord or having those rental properties as a cash flow for you, reach out to us and we can give you all the ins and the outs for that program and help you see if that's something that you might qualify for.
Absolutely. And some, not all, but some of our lenders, if you close in an LLC, they do not report those to the credit bureau. So not all of them, but some of our lenders do. So that's an awesome perk too, because you never have to worry about your debt ratio getting to a point where you don't qualify if you're an investor looking to expand your portfolio.
That's true. Very, very good point. Okay. Well, I think that we have answered a lot of questions. We've talked a lot about the different loan types that we might be able to help you with. We helped to demystify some of the questions that we've been getting about rates and how the rates are going to look next week. So if you do have any questions and we weren't able to answer those live, go ahead and leave them in the comments, and we will be sure to check and answer those for you in the comments.
For sure. Awesome. Thanks for having me today, Nate.
It is my pleasure. Look forward to doing this again soon, and we will see you guys then.
All right. Bye.